Okay, so the next topic, okay, that is included in our module 6 is that is also related with the national income is how to measure the national income. Okay, so we have different methods to discuss. Okay, so the first method is using the product method. So in this case, to measure the national income, all we have to do is to add the values of the output, okay, that is being produced, as well as the services rendered by the different sectors of the economy during the year. Okay, so again, we will add the values of the output. Okay, so in this method, please take note that we will only include the value added by each firm in the production process in their output figure. So, therefore, this is also known as using the value added method. Okay, so the value added output of all the sectors of the economy is basically the GNP at the factor cost. So again, here, what we are referring to when we measure the national income is all the values of the output that is being produced or the value that is being added, okay, during the production process. Okay, so here we focus on the cost of the goods or services that is being produced or rendered, okay, from all of the different sectors in the economy. So may it be from the agricultural sector, okay, commerce and industry, technology, and the like. Okay, so all of the value added during the production of their goods or on the rendering of the services. We add all of this to measure the national income. This is again under the product method. Okay. So the second method is using the income method. So if we will just uh, compare this with the first one is product method, meaning to say we focus more on the production process. Whereas in this second method, we will deal more with the income. Okay, so under this method, we will add all the income, okay, from the employment and ownership of assets before tax, okay, that is received from all the production activities in an economy. So it is also the factor income method. This is the other term of the income method. So we also need to add even the undistributed profits of the private sector and the trading surplus also of the public sector corporations. So however, please take note that we need to exclude items that does not arise from productive activities. Okay, so we will exclude those items from sickness benefits, interest on the national debt, and the like. Okay, so again, in this method, we add all the income from the employment and ownership of asset before tax. Okay, so this is how we measure the national income using the income method. Okay, so the next method for measuring the national income is the expenditure method. Okay, so here we will measure the total domestic expenditures of the economy. So it will include two elements. Okay, so we have the consumption expenditure as well as the investment expenditure. So consumption means that uh, it is related to the household sector, okay, on the goods and services, and the consumption outlays of the business sector, and even the public authorities. So this is what we mean by consumption expenditure. Whereas an investment expenditure refers to the expenditure on the making of fixed capital, okay, such as plant and machinery, building, and etc. So basically, consumption and investment expenditures are all, uh, or we consider them as expenditure, but they are of different, okay, in terms of the concept, and even in accounting we also consider them differently. Okay, when talking about consumption expenditure, this is considered to be an expense account, meaning to say once this is incurred, the cost of that is expense outright, okay, because it has no future benefit. Whereas investment expenditure, or in accounting we also call this as the capital expenditure. So this one is considered to be a an asset, okay, because the cost that is incurred in this type of expenditure is deferred, okay, because the organization, the enterprise will still use, okay, what they have invested, okay, and upon using that uh, investment, they are earning a benefit, okay, in the form of financial benefit, okay, as the time passes by. Okay, so it has a future benefit. So that's why it's deferred and considered to be an asset. Okay, but when talking about the national income, the consumption and investment expenditure are added. Okay, so that we will be able to measure and determine the national income of a certain country under the expenditure method. Okay, so those are the three different methods in uh, measuring the national income. Okay, so however, there are certain difficulties in the measurement, of course. Okay, so here we have first is the conceptual difficulties. Okay, so number one, it is difficult to calculate the value of some items such as services, okay, for free, and goods that are to be sold but are used for self-consumption. Okay, so this is uh, somewhat a dilemma on the part of those who are in charge, and even on the part of the enterprise in a certain sector, okay, on how they actually calculate the value of those. Or it could also be that they have included this value in the measurement. However, it is for free and they consume it. Okay, so there is some dilemma, okay, right there. Okay, especially in the measurement of those items. Okay, so the question there is that uh, should be added to the measurement of the national income, or it should be excluded. Okay, so that is one. Second is sometimes it is, or it becomes difficult also to make a clear distinction between primary, intermediate, and final goods. Okay, so they should have, or actually there is a definition of what final goods means. However, if you understand the process of production, especially, okay, we have their inventories, okay, like raw materials, in process, work in process, inventory, and the finished goods. Okay, so what about if other? enterprise in a certain industry have added even the primary and intermediate goods to the value of the final goods. Okay, so the question there is that allowed, okay, as part of the measurement of the national income? Okay. So third, what price to choose to determine the monetary value of the national product? Okay, so this is always a difficult question. However, based on the definition earlier, we should base that on the market prices. Okay. So number four, whether to include the income of the foreign companies in the national income or not, because they emit a major part also of the income outside of the country. For example, in this example in India or in the Philippines. Okay, so is that part also of the measurement of our national income? Okay, so that is depending on the concept that we are using for the measurement. Okay. So that is for the conceptual difficulties. The second difficulty refers to the statistical difficulties. Okay, so here, in case of changes in the price level, okay, so we need to use the index numbers, which have their own inherent limitations. Okay, normally when we say index, this is provided by a certain agency or group of enterprises or sectors in an economy. So normally the indices are average. So meaning to say there are prices that is above and below it. So how relevant is the index that we will use for the measurement of the national income? So that is the question. Okay. So number two, statistical figures are not always accurate as they are based on surveys. Okay, so also all the data are not often available. So sample means a part of the population. Okay, although in statistics we can consider sample as representing the population as a whole. However, in most cases, especially in the national income, probably, we cannot absolutely say that this sample actually represents the whole population. Okay, because we did not get all of the data from all of the sectors in an economy. We just pick selected sectors or enterprises to represent them. Okay, so the question there is that representative really of the population? Okay. Number three, all the countries have different methods of estimating the national income. So if you could still remember, we have three different methods. So they may measure their national income using the product method, the income method, and the third one is, I forgot. Okay, expenditure. Yes, expenditure method. So basically, if this is the case, then especially if we want to compare, okay, the national income of the different countries, so we cannot actually benchmark or compare them reliably because they may use a different method, okay, for the measurement of their national income. Okay, that's why we cannot conclude that if a country has a high national income compared to that of the others, we can easily conclude that this countries with lower national income has is I mean a poor country or is not performing well in terms of their economic activities. So we will just first identify or check, okay, of what method does that country use for the measurement of their national income. Okay, so that's all for the methods of measurement for the national income.